Okay, folks, we are live, and we have a lot to go over here. I cut out early on Friday. I had some pre-surgical work to get done, and then I went away for the weekend. I did the weekend commentary members. It's in the member. What I had expected to occur is occurring now. The markets closed out last week very, very poorly. We're going to talk about why I am so utterly bearish on this market right now, and why later on that I think that we're probably going to finish this month stronger. So a lot of negative news to get through, a lot of positive technical events that are on the horizon and really developing right now. So we'll get to that. We'll also do some futures reviews, as we're going to do in about 2 seconds. But first, as people filter in here, let's we only have 6 people on. That's crazy low. Seymour Rivers, audio good. Thank you, sir. Oh, by the way, today, or actually yesterday, begins Sober October, the entire month of no alcohol, 5th year, no alcohol, month of October. And actually, I began today. It was my anniversary yesterday. So began today, and I'll go through the first Friday of the first week of November because I had to penalize myself for not starting accurately on time. Talon. Hello. Pete, welcome. All right, so we're getting people filtering in now. Good. We have Pat, the great Pat. Hello, sir. Devin, hey, Bob, and everyone, thoughts on platinum? We'll take a look at it. I saw a 30% move from registered last week. Okay. Oleg, hello, sir. Good evening, dear sirs and traders. Hello, Oleg, I believe from Moscow. Welcome from Moscow. Denny, hey, Bob. So is 2008 happening all over again with Credit Suisse? Yeah, we're going to talk about that. You know, I have a couple of headlines that we're going to talk about. If the dollar continues to press up higher, in all probability, yes. Credit Suisse, is it going to go under? I doubt it. They'll probably nationalize it, but it'll go to zero. It'll go to pennies, just like Fannie Mae, Freddie Mac. Falcon, I had a dream that literally woke me up. The red candle fell and could not be stopped. Yeah, we're opening up week. RB, hey, how you doing, RB? Good to see you. Oleg, yeah, I'm testing my memory. Okay, let's get to it. Let's begin with the futures action. The bid ask before the futures opened implied a lower low. We got the lower low. We're beginning with the NASDAQ. The NASDAQ 100 is opening lower. It was lower, but at current down 1/3 of a percentage point. Holding on to 11,000. This is probably not going to hold. Folks, I want to begin this off right off the bat. Hit the like button and subscribe button. That really wasn't what I wanted to say, but I thought about it right then and there. So I figured, okay, let's get to it, get it out of the way. So that plus, if they turn this market around, meaning we're down 1/3 of a percentage point, we wake up tomorrow morning, it's up 1%. Absolutely beautiful bright green futures. Do not go chasing this market. It's what they want you to do. They are luring you in. Those futures are like a diamond jig to a barracuda. Do not allow that to be you. You are here because you are highly intelligent. You want to know what the alternative media is saying about the market. This is what we're saying. They want to sucker you in. CNBC will not tell you that. Bloomberg will not tell you that. I'm telling you that. If you would have listened to me on Thursday night, I said the same thing on Thursday night and Friday. What did they do? Ramp the market up higher. And what happened by the end of business? Boom. So if you're that poor SOB that bought at the highs of around 11 a.m. Eastern Standard Time, you're not feeling too good right now as you proceed into Monday morning. So At current, we are now down below 11,000 on the NASDAQ 100, basically the triple Qs. Let's move on to the S&P 500. These are the E-minis down, not too bad here. My guess is that we have yields up, forcing tech lower, and not doing all too much damage to the S&P 500. But I worry about the banks. I'm worried about the banks. Let's check out the small caps. Small caps holding up better than the Qs, down spot 22%. Let's take a quick peek at what the dollar is doing. The dollar is driving a lot of what's going on globally right now, folks. Remember that global debt is by and large denominated in US dollars. Energy, commodities denominated in US dollars. So when you have the Europeans, in particular the British, that have to go buy a barrel of oil, they first have to go to the currency market, take that British pound, which a few years ago was worth $1.50. Now it's about parity and maybe a little bit more. I'm being hyperbolic. And now it takes a lot more pounds to buy that barrel of oil. Why? Stronger US dollar. So at current, the dollar is about flat relative to the close on Friday. Usually don't get that. Let's check in with commodities. We did very, very well with our gold positions last week, silver positions last week, and we have gold. Is it even open? It looks open. There you go. Gold is up. And there we go. Now it's showing. Okay. We're up. We're looking good. 30-minute bar looking good. We have a breakout. Very nice. Taking a look at silver. This is the 1,000-ounce futures bar. I look at this because this is what the central banks buy, and it is looking pretty good. Let's take a look at it on a weekly chart. I've clearly stopped going down here last week. Bullish reversal bar, a higher low. Now we're looking for a breakout, and we have it on a weekly time frame on silver, assuming that we close where we're at current or higher. Let's take a look at natural gas. Natural gas, this is a weekly chart. Let's drill down. Not looking good here. A poor open. A very poor open. And at current, we are breaking or flirting with a break of this 30-minute lower band of support. Here's the upper band. Let's go to agriculture. Corn, wow. What a rip on Friday. Now we're pulling back some. Let's take a look at the weekly chart. This is last week's price action. It broke out here, consolidating. Corn looks like it may want to go up higher. Soybeans got rocked last week. This is a breakdown on a weekly time frame. So if you're a commodity trader, worry about soybeans. They're breaking down on a weekly time frame. Wheat looking strong. This is last week's candlestick, looking good. How are we opening up on wheat? Not much happening here. Let's, I want to take a look at the British pound. It had a good week last week, but this is a currency that is clearly under duress. The euro is down at current. The yen has been consolidating. I didn't want to do that. Has been consolidating. This is the Bank of Japan intervention back on Thursday. What day was this? This 22nd of September. Ever since then, we've been consolidating sideways. And I think this is going to get resolved to the upside because we're pretty oversold on monthly, weekly yen. But it doesn't mean all that much unless, of course, the euro rallies and the dollar is still not doing much at current. Let's take a quick look at yields. Yields are down, but we're still flirting with that four handle. You know, if you're looking at your charts, your end of day charts, you're probably not seeing what happened last week. And that was this, is that right here, last Wednesday, we hit a four handle in the futures market. It was in the pre-market. It doesn't show on a lot of charting software, but this is the first time in many, many years where we've had the 10-year at a four handle, and then they sold into it. We kind of predicted that would happen. It'll probably happen again. All right, so let's circle back, take another look at the NASDAQ. Are we firming up here? Yeah, we're firming up. And we tapped on a 1 hour time frame, the third standard deviation Bollinger Band, and they're bidding the NASDAQ now. Again, folks, I can only underemphasize, or I can't overemphasize enough that if they turn this market green tomorrow, and if they rally it, I would not go buying stocks. If anything, I'd be looking to put on more hedges. I'd be looking to lighten up. I'd be looking to short the market. That is the game plan going into the new trading week. And we're going to talk about the whys in a moment. That doesn't mean that we're going to stay cautious for very long, because there's a number of reasons why we want to get bullish on the market. I went over on Thursday. I have a couple of other charts that I'm going to go over tonight to excuse me, to emphasize why you should be a little bit bullish on the market as well. Not quite yet. Looks like they may turn the NASDAQ positive here. Possibly. Let's see if we get a new hourly higher high. Create an alert. Okay. Let's get to it. All right. So I want to begin with we spent a lot of time, and a lot of people feel shame about taking the loss. And last Thursday, I did a video, and I got a lot of feedback on it. Most of it, honestly, all of it was positive. So there was not one negative piece of feedback. So we did a video. It's posted last live stream on Thursday night of last week, how on BlackRock, we took a tactical retreat because I was concerned about several things that were hampering our trade. It was under pressure. We were underwater on it. And we had sold puts, and our 160 strike price was about to get breached. I was worried about the chart. I thought it would break it. Here's what I had to say on Thursday night. This is just a piece. I'm not going to play it all. The S&P 500. The S&P 500 today took out the June lows. We can't ignore that. That's a problem. Now, I'm not saying we're going to crash tomorrow. For all I know, we're going to go to new all-time highs tomorrow. All I'm saying is the stars are not aligning right for this trade. because I already have a problem. I am being challenged with a very, very expensive stock on my put side, of which I am the underwriter. I need to take those shares from the person who bought the puts if the shares go in the money. So the other thing that really got me was two things. One is earnings. Earnings are coming up on the 13th of October. So the question I have to ask myself is, if this stock is trading down below 560 on earnings, and it's a relative underperformer relative to the S&P 500 and the financials, the XLF, are you going to feel comfortable, or are you going to feel very, very sick being the gambler holding this stock into earnings? Sometimes the questions answer themselves. Okay, so you fast forward from that, and when I was recording that, and you're doing it live, and honestly, you put yourself out there because you don't know whether or not you're going to be made right. And I think I said it on Thursday night. I said, you know what? Probably me going live and saying this it's probably going to spike up tomorrow, meaning Friday, and I'm going to look like an idiot. But you got to make the decision. You got to look at your portfolio and you got to say, okay, am I right, or do I stand to substantially take an adverse hit on my portfolio? Should I not act? I see the problem. How you got there is one thing, but seeing the problem and not acting on it, that's an entirely different thing. So you fast forward to the next day, and I'll be honest with you, when I walked away from my computer, the shares were up, but they had begun to pull back, and I was like, you know what? I'm probably going to get made the fool here, but okay. But when I checked in later on in the day, because I didn't really check the quotes for the remainder of the day, we broke through 560 and we closed down at 550. And all I said to my wife over the weekend was, thank God I got out of that trade. Thank God. So sometimes first out, best out is the best thing to do. You see the problem. What we did do is I did open up another trade, and we sold deep out of the money calls, but I also sold, you'll remember on Thursday night, we identified support levels at which to go potentially buying the shares back on TrendSpider, and they were giving us a 547 read, and below that a 525 read. So what I did is I said, you know what, let's sell calls that'll protect our new naked put position. And I put that position down at 530 per share. My original strike was 560. So 30 points below, expiring in 14 days, 2 days before earnings come out. So I resolved a bunch of issues with an adjustment of one trade. So will I make money on it? We don't know that yet. I can't say we're going to make money on it. We'll there's a good chance we get tested on that trade, but I feel a lot more comfortable with the decision that we made and getting out of that prior trade. So that's just a follow-up on the BlackRock move. And we'll do a post-mortem review on the trade. If we make money, if we don't make money. Let's go to comments. A lot of other people checked in here. Pat's not popping up here. Pat. Kathy Wood getting killed in her ARC funds. I think it's an opportunity. Could be. Yeah, could be. Scalped every day last week. Morning opened and then crap. Yeah, it's exactly. Just exact. That's a trader mentality. You got to feel for the market. You know what they're doing. They're spiking the market and you're taking advantage of the scalp. Good. What can you tell us about I-bonds? I think that there's a limit. You can't sell them. I know very little, to be honest with you. I know they yield a lot of interest, and it's real. It's interest payments in real terms, meaning not in nominal terms. You're making an interest rate that outpaces inflation. But I think there's a lockup period on those bonds. That's all I really know, and it's really I could be proven wrong on that. I would fact check me on the lockup period. I don't know much about those bonds, to be honest with you, but that's what I think I do know. But that needs validating. Trader Isaac, hello Bob. Is XBI showing relative strength versus the market? Is the sector, excuse me, that's the home building sector? I thought that they were up last week. I thought I heard that. Somebody say that. At least one day anyway. Yeah, they were up on Friday. Yeah, it's on a relative basis relative to the S&P 500 on the week anyway. Sure, they massively outperformed the S&P 500. So, yeah, no doubt about it. But you have a lot of resistance immediately above. So just be forewarned that there is resistance up there, but it looks as though we're forming a base on the XBI. Clark, wouldn't a bounce with the 200-week moving average be warranted on a technical basis, however short-lived? Yeah, I see what you're saying here for the S&P 500. Yeah, sure. It's a psychological support level. So yeah, it's a fair point. Will it be defended? To a certain extent. Yeah, I would think so. Yoga Mac, welcome. Yes, sir. Like and subscribe. Thank you very much. If you want to beat the bear market, yes, sir. Franklin, Bob, good evening and happy anniversary. Thank you very much. Appreciate that, Franklin. We had a good weekend. Hi, Bob. I'm looking at SPY 330 on October 15th and SPY 390 rally. Okay. Where are we now? I can't argue it. I think we're going lower. 390 to the upside on a counter trend bear market rally. You're not giving me a date of when that should get hit. Is it possible? Sure. We know that bear market rallies are the most ruthless, so it's certainly possible. But that would mark clearly an upper band of resistance. So, and that 4,000 mark on the SPX is clearly going to be psychological resistance. Seymour Rivers, will Powell continue to talk tough and stay the course? If so, it's curtains. We'll talk about that in a moment. Credit Suisse is tanking faster than Titanic. Yes. They will not go under, though. They will be nationalized. Remember 2 years ago, ARK was all the talk of the town. Yeah. I criticized her for the longest time. I like her as a person, but that doesn't matter in business. I mean, she bought horribly. She bought Robinhood right at the IPO. I was like, you got to be kidding me. Could be, Rick. And hello to you. XBI's, this biotech sector. Yeah. Oh, yeah. I was looking at LABU on the biotech, Trader Isaac. Yeah. So I'm glad you corrected me on that. I had real estate in the top of my head. I thought it being odd. So I took a look at LABU earlier with members on the week ahead commentary, and yes, definitely relative outperformers. Enoch, hello, welcome. SPY bear market rally off the new lows this week or next week possible. Agreed. Are you going to talk about the emergency Fed meeting tomorrow? I didn't know about an emergency Fed meeting. See, that's why we joined. I learned something too. When did they announce that? Hold on. Could somebody provide a link to that? We want to validate that. I'm not seeing it. I was getting ready. Falcon, if you could provide a link or something like that, that'd be great. Rick Roofing, what's up, brother, to you? Hi, Bob. I'm late. Love this part of Sunday. Glad to have you, TZ Burton. LFG. Oh, so it was okay. So it was expedited. It was in the books. Is it on the calendar? They didn't have it, and this is why I didn't see it. It was not on the calendar tomorrow. So if anybody has a link or something like that, we could take a look at together. That would be awesome. But thank you for bringing that up. Appreciate it. That's why we're here together. Stand strong. All right. So let's kick things off with where we're at. S&P 500. Last week was a close of week, quarter, month, and so far on the year, the S&P 500 is down 24.77%, down to how we finished out the quarter. On the quarter, we were down 5.28%. We had a bit of a counter trend rally, which was rejected. Volume trended lower and moved in lower than the prior quarters. Stokes are very, very ugly, rolling over. MACD can go positive this quarter. If not next quarter, it is declining very, very rapidly. So we may be looking at a negative crossover on the S&P 500. Monthly view, we were down 9.33%. We took out the lows of June. Stokes are still weak, and I always say this to members or anybody else who will listen. When you have your stochastics, a lot of people use them for overbought, oversold. That's all well and good. They're a momentum indicator, folks. They're a momentum indicator, not necessarily meant for overbought and oversold. The most value I get out of the Stokes are where is momentum? And when you have the bulk lines on Stokes declining down below the 50 mark, rallies tend to fade. So be very, very careful. What happened last month and the month prior as the Stokes were trading down below 50? Well, we got massive rallies, right? What did they do? They faded and they closed negative. There was a rejection. This is not over. Weekly view. Weekly view, Bob. You got it. There we go. Down 2.1%. Again, we took out the June lows last week. That's a follow-through on the Dow Jones Industrial Average, the Dow Transports, which had blown through those June lows the prior week. Now we have a validation that the S&P 500 has now broken as well, and it did it on massive, massive down volume. Now, looking at the data that came out last week, University of Michigan inflation expectations tumbled in September. Remember, bad news is good news, and good news is bad news. Chicago PMI plunges into contraction, weakest since 2020. We all know what happened then. Prices paid, this is important. Prices paid rose at a slower pace, signaling expansion. We're still expanding, but a lot of red flags. U.S. pending home sales tumbled 11-year lows ahead of recent rate hike. This is the PCE. Fed's favorite inflation indicator unexpectedly surges as personal spending jumps. That's a problem. The Federal Reserve is trying to crush demand. And this PCE inflation. So this all but set the stage for that reversal on Friday. Now, coming up in the coming week, in terms of economic data, it was mentioned by Falcon that we have an emergency Fed meeting. Hold on, we got more information on this. Perhaps TF Hatter, Bob Bullish, I found your channel way back. Thank you for being there. Do you have any insight on the Fed meeting? I was looking for more information, but it's scheduled for 11:30 Eastern Standard Time tomorrow. That's confirmed. Meeting may be in Europe, not the U.S. Okay, so maybe it's an ECB meeting. It can't be a Federal Reserve meeting. An emergency Fed meeting doesn't seem like a bullish signal, right? Well, I'll bring you back to the COVID meltdown, and you remember that the Federal Reserve had taken several actions, and they were met with initially massive selling, like day one on the announcement, massive buying, but the next day they took out the lows, or within a couple of days they took out those lows, and they moved lower. The equity market moved lower. It wasn't until Congress started announcing spending plans, so you had rate cuts along with massive spending, massive stimulus. That's what got the markets moving up higher. So tomorrow, a lot of Federal Reserve activity. We saw that a lot last week. There were 17 Fed engagements, speeches, whatever they do. And Jay Powell is going to be speaking on digital finance. They're trying to speed up that digital dollar really, really quick now. There's an executive order out there. We discussed it a couple of weeks ago, trying to expedite the digital dollar. They want to go to a cashless society. Call your congressman, senator, tell them, we see you. We do not want this. We see you. Durable goods coming out. No, this is the wrong data I'm reading off here. Hold on. Next week's. I knew that was reported last week. All right, October the 3rd. We have, again, no scheduled Fed meeting. Manufacturing PMI coming out, ISM Manufacturing Index. Any read above 50 is a sign of expansion. Any read below 50 is a sign of contraction. The expectation are for reads above 50. We're going to get construction spending. That should be interesting. Motor vehicle sales, very interesting because you're seeing used car prices. This is probably going to be new cars, but used car prices roll over and repos really begin to pick up. Repossessions by the banks. Tuesday, we're going to get job openings, quits, factory orders, more Fed heads coming out. This is a jobs week, folks. Wednesday, we're going to get the ADP employment report. Remember, one of the mandates of the Federal Reserve is jobs. And if you see a negative read on, or a disappointing read on non-farm payrolls on Friday, that means that you're going to see a massive rally in the equity market. Why? Bad news is good news. It doesn't mean it's going to last. We're going to get the ISM Services Index, a lot of the economic data coming out this week. And this is the final week where economic data is going to matter, because what happens the following week? Big bank earnings. Guess what? We're back into earnings season again. So Thursday, initial jobless claims. Really, the pimp Mac daddy of them all is going to be the non-farm payrolls on Friday. Everybody's going to be watching for it. As we go into the new trading week, we have a Shiller PE ratio, the lowest that we've seen since I've been doing Sunday Night Futures Live, but we are still overvalued. We have a PE going into the new trading week on the S&P 500 at 26.84. The mean is 16.98. Valuation as measured by the Buffett indicator, we are fairly valued. We, again, are at the lowest read since I've been doing Sunday Night Futures Live. And while it's good news, the bad news is that we are still expensive relative to historical trend, which we are very close to. And we are now 19% beyond that historical trend. That's the narrowest gap we have to fill in a number of years, since 2020, in fact. Normally, though, you get an overshoot to the downside. So while it's good news, don't get lured into a false sense of security that we're near a fairly valued trend line. Normally, we overshoot, and that's where you want to begin loading up on equities. We went over this on Thursday. It bears reiterating that the Federal Reserve's balance sheet is declining at a more severe rate of change than it has been. And remember why this is important. What brought us to the party? What created the big bubble in equities? The expansion of the Federal Reserve's balance sheet. What do you think is going to happen now that money's becoming more expensive? You don't nobody's borrowing money to buy back stock. Hell, they may be selling stock. You're seeing a decline in their Fed balance sheet, money becoming more expensive, and that is not boding well for equities. So I went over this chart on Thursday night. It bears repeating. I think that this is still the game plan that we are setting up, very similar to what we did back in 2008. We are in black here at this current bear market. Here is the bear market of 2008. And we are setting up for what I believe to be a bear market rally, but we need more pain first. Why? We broke the June lows. It doesn't end there. When you break a prior low, which was put in months ago, it just doesn't stop with 1 week down. It's going to take more, and you're going to need to see a support level tested, probably overshot to the downside, a rally back, and a bullish key reversal bar on the week. We close at the lows of the week. What that means is that in all probability, statistically, we are going to take out the lows of last week. And in the futures market, we already did it. We did it tonight. So we're looking for a bear market rally. So let's talk about the hindrances that are out there that are major, major concerns for the financial markets. Folks, the credit default swaps, the spreads are at 14-year highs. We haven't seen them at this type of trajectory since Lehman Brothers. So the expectation is that you have a big institution that is in trouble, and all eyes are on Credit Suisse. When you get a big bank like this, and the CEO comes out and he has to openly say, strong liquidity position, Bear Stearns, as market panics over soaring default swaps. You don't want to hear this out of a bank that you're invested in. You certainly don't want it if you're invested in any old bank. Why? You got to remember that is 1,000 trillion, a quadrillion dollars worth of credit default swaps, derivatives. It's like Warren Buffett called it the nuclear holocaust of financial destruction, something to that effect. But you get my drift. And Lord knows who has counterparty risk, probably every institution out there to Credit Suisse. And the irony of it all is that what is the last name of the CEO? Lehman. You can't make this stuff up. Let's take a quick look at their chart. I think it's CS. I haven't looked it up in years. Yeah. Wow. This is beyond distress. This reminds me of AIG. It reminds me of Bear Stearns. It reminds me of a bunch of banks that are no longer here. Wow. Wow. Do not catch the falling knife here, folks. If they nationalize the company, shareholders will get wiped out. Do not catch the All right, so other issues that are out there, and this is just not uh, a UK issue. It's a global issue. But the UK, their pension funds are in major trouble. All these pension funds, because yields have been so low, they've had to go after more risky assets to keep up with their mandate to run 8% yearly returns, and they've had to go on leverage. So UK pension funds, we all know what happened to the British pound over the past couple of weeks. I did not want to go to this one. Here, US pension funds could face their own Lehman moment. All of them. They have gone on leverage. I read this earlier. They had a chase gets turned against them. This is what I wanted to go to. Okay. I wasn't right. All right. So Fed put, is it getting closer? This is what we all want to ask ourselves, right? Because in 1971, it was the beginning of the end for capitalism. And in 2000, after the dot-com bust and 9/11, we left capitalism and we went into creditorism. So basically, you weren't rewarded for saving. You weren't rewarded for investing, unless, of course, you're on the right side of the Fed. You weren't rewarded for speculation to the downside, unless you got it right, and which was rare during times of the Fed put being in effect and them printing up a lot of money. So we have gone with capitalism is dead. It'll come back, I think, at some point in time in the future, but we need to wash out the system. So is the Fed put getting closer? That's the big question. And I think the answer is yes. They do not want to admit it yet. But there are many reasons to see, and we're going to go over the VIX in a moment. We're going to go over the skew index, and we're going to point to reasons that the market could, in fact, rally in the next few days. And other issues beside Europe, beside U.S. pension funds, besides Credit Suisse, besides first world, not third world, currencies crumbling under a strong U.S. dollar. This is what the Federal Reserve needs to look at. This is a lot of pressure. They're looking at Tesla, which really has not buckled along with the rest of the market. It's beginning to now. Tesla reports lower Q3, marking a record but missing expectations. They will be punished tomorrow. Nike shares fall as overstocked inventory weighs on earnings. We talked about this on Thursday night. I said, don't buy in the after hours session. It's probably going lower. They will crush the next day. Micron dips as Q1 guidance. This is the largest DRAM memory chip producer in the world. Micron dips as Q1 guidance misses estimates by wide margin, plans 50% cut in spending. So these are the things that we're looking at as we go into the new trading week. And this is a meme. This is a meme on you'll own nothing and you'll be happy. Well, in this situation, you'll rent nothing and you'll be happy. Why? Rent-A-Center crashes after pulling guidance due to collapsing economic conditions. So, folks, the analysts have yet to downgrade forward-looking guidance on earnings. They are still expecting on consumer discretionaries 14 to 16% revenue growth moving forward. I don't think that's going to happen. They need to ratchet down those expectations. That's what's going to drag this market down lower on valuation concerns, along with whatever blows up here in the coming days. Could it be over in the Ukraine? We have an annexation. I personally believe that this is a bullish event. It's a reason for the Russians to declare victory and create a zone in front of these areas and declare victory and, by and large, go home. The problem is that if we do not recognize that these new regions over in the Ukraine, and I'm not taking a position here. I'm not taking a position. I think that what we did in 1963 by telling the Russians, hey, listen, you put nuclear weapons in Cuba, we're going to war. We were right then, and they were right now for what was an avoidable event. All we needed to do, I've said this before, hey, Zelensky, before you got Russian tanks on your border, what you're going to do is we're going to send $1 billion to an offshore account. What you're going to do is you're going to go out to a microphone right now, and you're going to say, you know what, we're not going to join neutral EU, and we'll be good with that. No Russian tanks come over the border. What did we do? We incited it. We caused it to happen. We continue to make this war happen. Who suffers? The people of the Ukraine. Who suffers? Now it's going to be the Europeans, because now we're stabbing them in the back. Because they do not have the natural gas they need to be able to defend themselves, heat their homes. Fed begins to split. Now, here are the signs that the Federal Reserve is beginning to fracture somewhat. And these are trial balloons. They don't let this stuff out unless they want it out. Fed begins to split on rate hikes as chaotic market breakdown looms. This is reminiscent of 2018, and I'll never forget this, when Jay Powell said the roll-off of the Fed's balance sheet, which was this back here, they were rolling off back here, and the markets couldn't take it. Look at where we're at now. The markets couldn't take it. And they had to run tail. They said no mas, and they began a new QE program. Then COVID hit, and now we're in the mess that we are right now. Fast forward, Gasparino, a really good guy. Always follow Charlie Gasparino on Twitter. He posted this: at the Federal Reserve, officials getting increasingly worried about financial stability as opposed to inflation as higher rates begin to crush bonds. Several big investors tell me Fed growing worried about possible Lehman moment with a 4% Fed's funds rate as bonds and derivatives, folks. Forget about the bonds, worry about the derivatives. Tied to them crash given the enormous debt issued in the past 3 years at super low rates. A Fed watcher told me that the UK intervention was not a one-off and that the same systemic risk could happen here, which might cause the Fed to pause more later. Oh, more later on Fox Business. Could cause the Fed, I confused myself there. Could cause the Fed to pause, period. So Charlie, a really good guy. If you're not following him on Twitter, follow him on Twitter. Fellow New Yorker, good guy. Nomura, when does the Fed blink? So all of these things are happening at completely rational reasons, meaning all of the events that are unfolding, the decline in bonds, the decline in currencies relative to the U.S. dollar, particularly the U.S. dollar versus the lack of viable global alternatives, gold, as the U.S. economy remains the cleanest dirty shirt. I've been saying that for years now, by far, while the rest of the world is increasingly incongruent monetary versus fiscal policy on structural issues. What are the problems? Collapsing terms of trade, trade deficits, manufacturing and industrial growth slowing, hiking into recession, crazy. Now you have Janet Yellen, our Treasury Secretary, not only wants to raise rates into a recession, she also wants to raise taxes into a recession. This is a woman that had cash in the Treasury while Fed's funds rates was at 1%, rather than selling 10-year bonds at 1%. What did she do? She spent the money in the Treasury. This is our Treasury Secretary saying these things. Incompetence at the highest levels. Demand destruction, that's the Federal Reserve. And while all the central banks are trying to rage tighten, basically fight inflation, monetary policy with hot inflation, but against collapsing currencies thanks to the US dollar wrecking ball. The dollar situation has got to be resolved. Now, I highlighted job losses in particular. Why? Because on Friday, we get non-farm payrolls. Very, very important. On Wednesday, we get ADP, but that's not as important as non-farm payrolls. That's a Federal Reserve mandate. And of course, we're worried about credit freeze. And of course, I went over this on Thursday Night Futures Live, Thursday Night Stock Charts Live, the skew index. We're going to talk about that in a moment, where we're at current. More going on here. The pimp Mac daddy of all globalists is Henry Kissinger. Well into his 90s now, Kissinger is actually worried about the Washington warmongers. He's gone off the reservation from Davos. Not wise to include Ukraine in NATO. Bravo. Bravo, Henry Kissinger. Russia stops flowing into Italy after a problem in Austria. So they're blaming Russia for stopping gas into Italy because of a problem in Austria. Anybody smell something horrible in the room? Here you have Giorgia Meloni. Whether you agree with her, disagree, it doesn't matter. She is she's against the Russian invasion of the Ukraine, but she's also a populist. Putin is a populist, a nationalist. There's no value for him doing this. There is value in the EU punishing Giorgia Meloni as she takes the helm in Italy. So have no doubt about it. This is the World Economic Forum going in and punishing Italy. How dare you elect a populist, a nationalist? Remember what that lizard person in charge of the European Union, the female, I forget her name. She said, we have tools to deal with this the night before the election over in Italy. They're dealing with it now. Faced with acts of sabotage, EU countries rush to secure energy assets. So things are ratcheting up beyond the borders of the Ukraine. These are all issues that we need to worry about. So I go back to this. I think that this is a good thing. Many think it's a bad thing. One negative could be is if the Russians view an invasion by Ukraine or an attempt to recapture these territories as an attack on Russia in and of itself. Will they use nukes? I don't think that they will, but you never know in this day and age. What else is building up? Turkey builds up troops in northern Cyprus, rages at inexplicable U.S. decision. We are upgrading Greece's military, and they don't like it, blah, blah, blah. Potential military conflict over in the Mediterranean. Globalists are marching us towards relentless nuclear Armageddon, warns former senator, and they are. These people are losing the narrative. They are losing. They were very emboldened during COVID with the lockdowns. And now all of a sudden, now that we see them, and it's becoming widely evident that we do see them, they are beginning to panic. The Faucis of the world resigning. All of them are worried about, I always been hashtagging military tribunals at some point in time down the road. So they will do anything, as they are now backed in a corner, to be able to stay in power. And they support Ukraine applying for military NATO membership. That would be the worst decision in the world for us to do. Unfortunately, we have a leadership right now that will rubber stamp it, and that will lead to a NATO incursion into this war. That will mean guaranteed in this situation, military tactical nukes will be used on either side. Ukraine will be the battlefield. And God bless us all if that ever happens. And I certainly do not want that. Hopefully this gets resolved peacefully. But they don't even have a talk about peace talks. It's not even on the table. Peace Q index. It's similar to the VIX. It varies. The VIX uses at the money. options, skew uses out of the money strikes, and the skew basically, despite the fact of all the doom and gloom that I just went over tonight, skew index is actually improving, and meaning that you're seeing the level of, you can see the correlation up here is the S&P 500 declining, right, along with the skew index. There were a lot of put buying during this downtrend, and now you're seeing a less worse scenario. You're seeing a rise in the skew index, and you're seeing a breakout on the week last week on the skew. So you have an indicator leading price performance. That, however, is that we have a divergence, meaning the S&P 500 is not getting the signal by the options market yet that we're seeing some improvement in the options market. They're not pricing in a catastrophic event. Are they right? Not quite sure. We have a lot of reasons for the purchase of put options right now with the breakdown of the S&P 500 on a weekly basis last week. We are seeing a lot of potential binary events come on the horizon, but you're seeing improvement on the skew index. What else is out there that is, I'll call this my favorite chart and my most scary chart. Both the VIX, two different timetables, right? So last week you had the VIX that was up on the week, but early on in the week, we had actually broken out on the week, broken out above weekly resistance. But something odd happened by the end of the week. What was that was odd? I'm glad you asked. On a weekly time frame, the S&P 500 had reversed to close lower, and it held the 200 period moving average on the week. It did close at the lows of the week, implying that we're probably going to get a lower low in the coming weeks. But as we reversed to close at the lows of the week, the VIX failed to follow through. And in fact, when you take a look at a daily chart of the VIX, we closed down on Friday, if you could believe it. So volatility came out of the market on Friday as you saw a reversal bar and the S&P 500 closed at lower lows. Very strange stuff. We've seen this before. Now, other reasons why it may not happen this week, may not happen the following week, because we have so many events that are unfolding in the marketplace, in particular technical reasons why I'm concerned about the market, because those are knowns. We don't know if Credit Suisse is going to go belly up next week, this week, next month, next year. We don't know, right? So all I do know is that from a technical perspective, the market broke down and broke down hard last week, leading to a probable lower low in the coming weeks. But when you take a look at the Bulls versus Bears sentiment survey, again, you have an overlay up here in S&P 500, which is declining, but you're also seeing a very, very steep decline in bullish sentiment. As a contrarian, I look at this and I say, okay, this is bullish stuff. Now, I'll get even more bullish if we take out the lows of April. That'll be really sexy stuff. But if we don't, that's okay. It'll be great if we get a higher low and we begin to move up higher as well. That may lead to an even bigger bear market rally. So that's a good thing. So there are reasons to be optimistic, but right now I would not go buying stocks. Maybe in the biotech sector. Other than that, I would not be a buyer of equities. Right now, it's the game to play here is I want to stay liquid. I want to live for that bear market. Another indicator that's out there that is very, very bearish at current, but as a contrarian, to me, I look at it and I say, okay, this is pretty bullish. And that is this. It is I want to make sure you can see that in my head. Okay. This is the advances versus decliners, meaning the number of stocks declining versus advancers. And you could see that we have broken down below the 2008 lows. This is spectacular stuff from a bullish perspective. This is exactly what you want to see. So what these charts are telling you is that there's a lot of fear out there, a ton of fear. And in the options market, they're kind of telling you that, you know what, well, I still think on this daily chart of the VIX, I still think that there's a very good chance that we break out. I drew this line for a reason. I forgot to go over it. I think that we're setting up for this is a consolidation, and I think we're going to break out. If we see VIX head up into low to mid 40s, I think that at that point in time, we need to be looking at buying equities on that blow off top, especially if we don't have an event, meaning Credit Suisse going belly up, a European bank going belly up. If you see the dollar pulling back, yields pulling back, yet the VIX is piercing 40 to 45. Well, remember what that dollar pullback does. It takes the pressure off of the other central banks. So it takes the pressure off of Credit Suisse. It takes the pressure off the derivatives market. So if stocks are selling off, the good news, then why aren't we buying? So that's how we're looking to play this into the back half, the mid half of the month. Not right now. These are just things that we are tucking away for future. Let's see if any news has come out at all. Jesus Christ, we have such nitwits in government. How this guy got this job, I have no idea. Blinken calls sabotage attacks on Nord Stream pipelines tremendous opportunities. They're talking about tactical nuclear weapons being used in the Ukraine, and this moron is out there stoking the flames. Absolutely horrible, horrible leadership. Horrible. Nefarious, in fact. Let's do some chart requests. What time is it? We're doing Sober October this month. Folks, remember, Sober October. Join in. Okay, ODLF. All right, ODLF. Oh, my interweb is a little bit slow here. Let's do a refresh. What are we doing here? Come on. Let me reboot this. I think Chrome just locked up on me. Yeah, it did. It just reset everything. If I lose you guys, I will be back on. Because sometimes it forces me to shut down Chrome. God damn it. There we go. I'll take a couple. I'm having down. Son of a bitch. Pardon my French. Guys, I'm going to lose you. I'll be right back on, okay? Back on. Come on. Okay, hopefully we're back live. If somebody could drop a note in the chat, I would appreciate it. If we are all systems go. I lost a lot of the comments. Let me go to YouTube, see if I could bring those comments up. Do. I think the last one was ODLF. If I could ask you folks to smash the like button, I'd really appreciate it. We have 42 people on, 28 likes, not horrible, but I would love to go for 48. What do we have here? ODLF. I think I typed that in the wrong. ODLF? ODFL. ODFL. Sorry about that. All right, weekly view. Oh, Old Dominion. Wow, this is a good one. Up week last week, relative performer. Possible higher low. Not horrible, but you have a lot of resistance immediately above. If you're going to buy this, I would use a stop right below the lows of the week of September the 19th. Daily view. Avoid this. Avoid this. Folks, we're using TrendSpider, 35% discount code below. The automated trend lines just told me avoid like the plague. I'm not sharing my screen. Holy cow. I just took a look. Thank you, Trader Isaac, everybody. Thank you for that. You should see it in a second. Cool. All right, we're going to go back to the weekly chart. We'll start this over again. Weekly chart, relative performer, relative to the S&P 500 up on the week, but we did see a topping tail. I would use a stop loss right below the lows of the 19th and get out quickly. I would stay small on the opening trade. If you're going to pull this trade using a daily chart, I would avoid this. Why? Again, TrendSpider, 35% discount code below. Automated trend line, folks. I'll take them off, put them back on. We're in a downtrend channel here, and we flashed a bearish reversal bar. We could easily retrace all the way down to either A, support, which marks the lows of the 19th or the week of the 19th, or if we break it, we're coming down here to a potential price of around 223 or even lower, because that's a declining lower band of support. It depends on how long it takes to get there. So I would avoid this one. I would like it if we were able to break out. I would create an alert, and if we happen to break out with zero sensitivity, all we care about is a closing time frame above the breakout point. Or if we happen to pull back to this lower band of support, you could buy it on a retest. And this is what I call one of those set it and forget it type of deals, right? I don't want to think about this stock, because thinking about it before my alerts get hit may cause me to make an impulse buy, and I don't want to do that. So when my alerts fire off, that's when I'll buy it. Not until then. ODLF. My alerts are set here. Now I set it and forget it. I walk away. Don't even think about it. All right, what else do we have? XLE. XLE, I've already gone over with members. They did well last week. As you can see here, again, using the automated trend lines, we held weekly support. We closed up on the week. Not bad. Stokes are declining, perhaps beginning to flatten out on a weekly time frame. So obviously they still remain a leader and not a laggard. Not loving the daily setup here. We bounced off of this support level, this lower band of support. Again, automated trend line. We bounced, we rallied up and into a bit of resistance here. Now, what I just did is I threw on an overlay on a daily chart, weekly support. And you can see what we did last week is that we closed above weekly support on this daily chart. So it's looking pretty good. A bit of a doji star formation, a sign of indecision. It's kind of middle of no man's land. If you do buy these shares, I would use a stop right below Friday's lows. That's XLE. FNGR. Wow. Finger motion. I've never seen this stop before. Let's go to a monthly chart. Major breakout. This is obviously a story stock. I'm not sure what the story is. I've never heard of the company. But as you can see, we do have history. The algorithm was able to pull up prior resistance in red, support in blue, and that prior resistance has now been broken above. We have closed above it on a monthly time frame. We will now see the prior support level now act as resistance, and that's up at around $5.96. The question is, where do we enter this thing, right? It went parabolic. So let's answer that question. I'm loving monthly Stokes. Remember, tomorrow's the first day of the trading month. So this is all in the books. So it's good to be doing this tonight. Let's run down to a weekly view. I'm loving the setup here. Let's take the heat maps. Well, the heat maps are good here, to be honest with you. Making it a little bit noisy, but I think you'll get what I'm about to do here. So we're looking for a retrace back down to a support level. The question is, after you put in this big red candlestick, where do you enter? Because you got to know where you get out. What you do is create an alert. Keep a little bit of sensitivity on. Long entry, tight stop. Because you know that if you close down below this lower band of support on a weekly time frame, you're going lower. You'll come down to this next support level down here highlighted in red. Let's take a look at it on a daily chart. Right now, you really need to wait on this. Let's take the heat maps off. It's making it too noisy. You really need to wait for a retrace on this stock because I'm going to overlay the weekly chart. Again, here's our alert, right? We blew through. It may be hard to see on your end, but in red, we blew through the third standard deviation Bollinger Band. I'll save you the technical jargon. We're not supposed to be there. So you're going to get a retrace down to, let's call it $2.70. And that's where I'd be looking to enter this trade. Pins, this is one I have not gone over in a long time. So long, we'll go to a monthly chart. It's consolidating. It's stopped going down. And on a relative basis, it's outperforming the NASDAQ and the S&P 500. It closed up on the month and the prior month and the prior month before that. We recaptured support the week before last, the month before last, duh. And last month, we did a retest of monthly support. I like the monthly view. Weekly chart. Good price action. Again, a relative outperformer. We're holding this VWAP, and that is about to begin rising. Daily view. Not a bad setup here. You do have a potential head and shoulders setup, left shoulder, head, right shoulder. So what I would do here is this. I would take my crayon out, draw a support level. I'll share this chart out. And if we break support, I would avoid it because it would probably break the neckline down here in blue. But if we break out above 20, let's call it $24, it's probably game on to the upside for pins. Let me share this out. And again, for those folks just joining in, if I could ask you to smash that like button, leave a comment, say hello. The YouTube algorithm sees activity and they love it. They really love it. GH. Garden Health. I haven't gone over this one in a very long time. Let's go to a monthly chart. A lot of this is a potential bear flag setup on Garden Health. I'm not saying it is. I'm just saying it's a possible. So you had a ruthless sell-off, you had a relief rally, and this is a setup for shorts where they rallied up and into resistance. They begin to put on short positions, and then once we break below this lower band of support in a monthly time frame, they lean in and they lean in hard because that's a breakdown out of that bear flag setup. So I'd be cautious here on a monthly time frame. Weekly time frame, we outperform the rest of the market. That can't be ignored. We did not put in a new weekly lower low. A little bit of topping action last week, not much. So if you're going to enter this, use a stop right below the lows of the week of the 19th of September. Add more on a breakout above $58 per share. Let's create an alert up there. And we don't care if it trades. I don't want any sensitivity. All we care about is a close above that mark. But while we're bullish on the weekly chart, remember that monthly chart is a problem. So if you break down to new weekly lower lows, keep in the back of your mind that monthly chart is breaking down as well, and the shorts are going to be on that like a diamond jig to a barracuda. So be careful. It's looking good short term, longer term, still a little bit wonky. Daily chart. Daily chart, you're in a consolidation range, not much to do here. You can buy it, tight stop, add more on a breakout, stay small with your initial position. A lot of comments tonight. Thank you very much for the comments. They help as well. FNGR, we did, right? We did that. I'll do BA. Position in, let me bring up the comments so everybody else could read it. Franklin, brother, thank you for being here as always. I'll talk to you tomorrow. I have a position in BA 140. Doesn't look like it's going much lower. I'm afraid it's hits COVID lows. Let's check it out. Yeah, it's going lower. It broke down on Friday below support. We marked this. This is my manual line here. And that was a demarcation line. It failed to hold it. It goes lower. Next price target is 119.67. If that fails, it's coming down here to 116.24. Let's take a look at how we closed out the month. The COVID lows were back here, and that was at the COVID low was at $89 per share. It's in the line of sight, and you could argue that, as I just discussed with that prior chart, you had a bear flag set up here, and this is why it's so critical to use multi-time frame analysis. Meaning, before you use a daily chart to enter a trade, look at the monthly chart, look at the weekly chart, then look at the daily chart. If all the stars are in alignment, go for it. But this bearish reversal bar back in August was a big time tell up at resistance, and we gapped down. This may hold, you never know, but I think that we need to overshoot it to the downside. If we close back above 119.47 by the end of business on October, whatever the 31st is, if that's a trading day, it may be lights, a green light to buy Boeing, because it could be a washout. Right now, though, I would just stand aside. We don't need to get in front of this locomotive. Let's see where it ends up. So I would avoid right now. We have somebody on from Twitch. Hey, welcome. Wondering how to subscribe to the Contrarian Trader or to you're talking about on the Twitch channel? Oh, first time on Twitch. I see. I'm sure you're smart enough to figure that out. You're asking an old dog like me. If you want to, there's a link to the website. If you want to subscribe to the Contrarian Trader, 14-day free trial offer. Get TrendSpider free with silver and gold level memberships. And we'll be glad to have you. Pete, FedEx. I'm probably not going to get everyone tonight. I'm starting to lose my throat. You're welcome, sir. Monthly chart. We have bounced off of the 200 period moving average on a monthly time frame. Volume was big. We know their earnings were not good. Forward-looking guidance was withdrawn. A lot of bad news out there for FedEx. That brought the entire transport sector down. Weekly chart, bullish on FedEx. Why? We have a doji star formation, a sign of indecision, and a sign of a possible trend reversal. Let's see if we get a washout on the S&P 500 this week. If we get that, and we have FedEx not putting in new lower lows week over week, that could be a sign that we want to begin to put on a position. Daily view. Watch out for a bear flag setup here. They rallied it. They reversed it on Friday. Watch for lower lows. Ideally, we do not break down below 140, 145. If we do break down below 140, 145, we're going significantly lower. So just be forewarned. Intel, INTC. It used to matter to the market dramatically. Now nobody even talks about Intel. Intel is going lower. This is a daily chart. We don't start with daily charts, but I can tell you right now it's going lower. Weekly chart, continuation breakdown here on volume. There's really not much in terms of support below. Let's overlay weekly support level. Oh, we're right there. This is the algorithm, folks. If you're not using TrendSpider, huge time saver and a money saver, link below, 35% discount code. We have support monthly time frame at 25.38 on Intel. Watch and look for an overshoot to the downside. If it closes above 25.38 on Friday, it is probably a buy. So Intel looking weak going into the new trading week. However, monthly support immediately below. Watch for a reversal bar on Intel. I mentioned the daily chart. We're looking for lower lows here. That goes unchanged. Again, in dash line is monthly support on top of a daily chart. You cannot put a price. Well, actually, TrendSpider did put a price on this. It's very cheap. This type of value is incredible. Sign up for it, please. Again, 35% discount code below. Cheapest price on the web. CarMax, good one to go over. I'm going to leave it off with this one. I apologize if I missed anybody, but my voice is shot. CarMax goes lower. We broke critical support on a monthly time frame. This resistance level up here at 107.47 is not going to be forgotten anytime soon. A lot of sellers up there. Next stop for FedEx. Let's go to a weekly chart. Wow, it fell out of bed. I would not short the stock because we closed out the week below the third standard deviation Bollinger Band. Again, we're not supposed to be there. So be careful. Be careful. Do not go shorting it because you may get a short covering rally. Where would I short it? If they rally it back up to 76 bucks a share in that ballpark, that would be opening up a short position into resistance. If it closes above that mark, you stop out small loss. If it breaks down, oh well, they're making money to the short side. Where might we have support below? Let's overlay monthly. God damn, there's not much below. You do have a volume shove where we closed on Friday. I don't think that holds. I think we may rally to alleviate the oversold condition on the 3D Bollinger Band. But I think that ultimately it's going to get resolved to the downside. You have a tremendous bubble in the used car market. So the algorithm's picking off a support level down here on CarMax at 58 bucks a share. I'm going to set an alert down there. And now I'm going to set it and forget it. I have no intention of buying this stock until those alerts fire off. So, folks, R-Train, you're welcome. Folks, I want to say thank you so much for being here. It's an honor to be here. Thank you for spending your time with me. Have a profitable trading week. Don't go chasing any bright green futures morning. Let the markets come to you. Identify support levels. Let them come to you, members. We're going to have a lot to do this week. So stay tuned. And don't forget, members, I have the week ahead strategy commentary in the members area. Go check it out. And I will talk to you soon. Again, have a profitable trading week and an awesome night. Be well.